$930 million in commitments just poured into Balbec Capital's latest flagship fund, a staggering influx of cash for an asset-based credit fund that's now poised to make some big moves. This is a significant development because it shows that investors are still hungry for alternative assets, even in a market that's been shaken by rising interest rates and geopolitical tensions. The fact that Balbec was able to secure such a large amount of commitments suggests that the firm has a strong track record and a compelling investment strategy, and it will be interesting to see how they deploy this capital in the coming months. But let's take a step back and look at the bigger picture. The global economy is still dealing with the fallout from rising tensions in the Middle East, and that's having a major impact on the oil market. Oil prices have been steady lately, but there are concerns that disruptions to flows from the region could send prices soaring. The US strikes against Iran have intensified, and that's got traders on edge. If the situation escalates further, it could have serious consequences for the global economy, from higher energy costs to disrupted supply chains. As we move from the oil market to the world of tech, we're seeing some caution from investors when it comes to chip stocks. These companies have been on a tear lately, but now there are worries that the massive investments in artificial intelligence might not pay off as expected. The valuations of these companies are lofty, and if they can't deliver on their promises, we could see a significant correction. And with geopolitical risks on the rise, it's no wonder that investors are getting a little nervous. The chip market is a key indicator of the broader tech sector, so this is a story worth watching closely. Meanwhile, in the world of hedge funds, Paloma Partners is making some big changes. The firm, which is led by veteran investor Donald Sussman, is pivoting its multi-strategy approach to focus on fewer managers. This is a significant shift, and it suggests that Sussman is trying to adapt to a changing investment landscape. The firm has seen a decline in assets over the past 3 years, so it's clear that they need to make some adjustments. By focusing on a smaller number of managers, Paloma is hoping to boost performance and attract more investors. But the story that might have the most immediate impact on individual investors is the jump in mortgage rates. We've just seen rates hit their highest level in a year, and that's going to make it even tougher for people to buy or refinance a home. This is a big deal because it's going to affect not just the housing market, but the broader economy as well. When mortgage rates rise, it can slow down the pace of home sales and construction, which can have a ripple effect throughout the economy. So, as we head into the weekend, investors will be watching closely to see how these trends play out, and whether they'll have a lasting impact on the markets. And that's all for now. Tune in tomorrow when we'll be diving into the latest news on the Federal Reserve's interest rate decision, which could be a game changer for the entire market.